The GDP data for Q1 FY25 was released, and as we can see, it fell to 6.7% from 7.8% in Q4 FY24 and from 8.2% in Q1 FY24. So while market participants could be concerned on the drop, but if you look at the internals of GDP, it's actually quite favorable. So if you look at the private final consumption, which is typically 55 to 60% of our economy, that actually picked up. So if you look at 7.4% of private final consumption, this is actually quite promising, and it means that the consumption, which has been a key concern for many policymakers, it means that it's picking up. And as monsoon distribution has also been going quite strong, this is also quite constructive for rural spending going ahead as well. So overall, we do expect consumption to remain quite healthy in the upcoming quarters as well. If you look at the high frequency indicators such as two-wheeler sales, rural credit, the demand under NREGA, these high frequency indicators are also pointing towards a healthy consumption expenditure going ahead as well. If you look at the most of the drop is largely coming on the back of government final consumption expenditure, which was expected due to the code of conduct during general elections by both center and state. So we do expect that once as the code of conduct has been over, government spending is coming back, we do expect even the government expenditure to come back and GDP growth to pick up. But if you look at GVA, which is also a very good indicator, and in fact, in many cases, a better indicator of growth, because ultimately GVA plus net indirect taxes is equivalent of GDP. So it's largely about net subsidies. If you subtract from GVA, which takes you to GDP, so GVA in a way reflects the true underlying activity. So if you look at the internals of GVA as well, they look quite healthy. As we can see, electricity production went from 7.7% in Q4 to 10.4% in Q1 FY25. Construction services went from 8.7% in Q4 FY24 to 10.5% in Q1 FY25. You look at real estate, trade, and even public administration, the spending has been quite healthy. So overall, we are looking at a healthy scenario and a more secular growth coming up for FY25.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.